What's up, guys? Jay Martin here, investor and CEO of Cambridge House, and my guest today is Briton Hill. Briton is the president and partner of Weber Global Management, a wealth management firm that handles the cash of hundreds of super affluent individuals. Now, what is interesting about Briton is he is a very young man to be doing what he does. He's 26 years old, but he's already gathered a decade of experience in the market. And so we talk about a lot of the usual things. I'm always curious where these money managers are putting their cash, where they're looking for opportunity, what they think is overvalued, and we covered all of this stuff. What struck me as a unique approach with Briton is he is really focused on the multi-billion-dollar pre-IPO market. And so we talked about that, how he sources opportunities, what those look like in any individual sectors and industries are most enticing to him. We talked about the precious metals market, about gold, about Bitcoin, and about the industry that both of us feel is the most exciting, which is health science or med tech, the future of health. And I love talking about this stuff. So super interesting. 3 things before we jump in. As always, if you'd like to subscribe to my weekly newsletter, there's a pinned comment right beneath this video where you can do so. Number 2, this YouTube channel now generates a significant amount of cash, which was unexpected but awesome. So what I've decided to do with this money is donate it to an organization that is super close to my heart called Zero Ceiling. Zero Ceiling's mission is to end youth homelessness, and the way they do this is by giving at-risk urban youth the opportunity to relocate to beautiful wilderness areas and then provide them with supportive housing and employment training and just generally great influences on their life. And I love what they do. So check out Zero Ceiling. And number 3, if you prefer to listen to my content as opposed to watch it, you can find us wherever you listen to your podcast. Just search for The Jay Martin Show. Here's Briton Hill. Enjoy.
I assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today.
Please give my panel a round of applause. Welcome.
And you're right, access and ease of use is a key obstacle for getting anything like labs done, as you said, and just decreasing those obstacles to access, I believe, will have such a profound impact on improving people's health, because if it's a challenge to book that appointment and to get to the doctor and do that test, you're just far less people are going to do it. We know as entrepreneurs, as money managers, what you measure in your life is what typically you improve, right? Those numbers you're paying the most attention to, that's where you notice the needle moving. And if we could provide that access for people to do that with their health, like what a game changer, right? And right. I love it. I see the tsunami of cash moving that direction, which is very inspiring. CEOs like Tim Cook saying health will be Apple's biggest contribution to the planet. You're seeing all the indicators, right? And so, yeah, I'm going to be paying attention to what you're doing there. That's really exciting. So I want to double back now to the crypto market, your Kraken investment. You spoke about that. Talk to me a little bit about how you qualify personally. Do you, Briton, do you invest in cryptocurrencies? Let's start there. Do you invest in cryptocurrencies? And if so, how?
Yes.
How do you hold?
I have invested in cryptocurrencies. Right now, my biggest crypto holding is going to be Kraken. I really like picks and shovels companies, and Kraken, for example, during the month of May, they had a record-breaking month. So even though Bitcoin cut in half, it was a record month for Kraken because of the volume, because they're getting fees on both sides. So I really like that. But for me, I've held Bitcoin multiple different ways. I've held the coin itself via exchanges, and I've also bought the ETFs. I don't think there's any one perfect way to hold it. I'm always in favor of holding it actually yourself if you could. But for some people, the crypto exchanges are very hard to navigate, especially people that are a little less tech savvy. So it's very easy for them to just log into their brokerage and buy the Grayscale Bitcoin Trust, for example.
Right.
Load up that way. You pay more fees. Usually you have a management fee, and fees can be a bit higher that way. But like I said, the ease of use, it can be worth it for a lot of people.
Okay. And I know you invest in precious metals, or at least you have in the past. Talk to me about how you view the relationship between hard assets like gold and silver and off-grid safe haven assets, if you think of it that way, like Bitcoin. And if you don't think about it that way, just let me know. Yeah.
Well, I think a lot of people, at least a lot of what I've been hearing, is it's almost like it's one or the other. And I don't think it has to be that way. I think that they both have good practical usage, and they both are value. And cryptocurrencies, especially Bitcoin, has inflation hedging properties and safe haven type properties, just like gold does. I think what we'll find is they'll work in sync. You know, some people are going to prefer gold, and those types of tangibles, and others are going to prefer the crypto and the Bitcoin. If we continue to move down a more tech heavy space, I can certainly see Bitcoin continuing to gain market share over gold, but that doesn't necessarily mean gold is going to become redundant forever. If there was ever a really strong clamp down on digital currencies and things like that, obviously it's really hard to go and confiscate everybody's gold that's in a safe in their house, but they could lock down the exchanges. I mean, we saw that in China. Again, I don't think that's going to happen. You're just thinking worst case scenario, but yeah, I see them working together. I own both. I own gold. I own cryptocurrencies, and a lot of my clients own both. They have gold and they have cryptocurrencies. I will say sophisticated investors tend to migrate more towards gold, but it's because those markets are a lot less volatile. And I think that is going to be one of the biggest contributors to sophisticated investors really starting to recognize Bitcoin as a safe haven asset and bolstering their portfolio to the levels that they have things like precious metals and bonds. It will be the volatility of the cryptocurrency starting to balance out. And I think that'll happen over the next 10 to 20 years, but it's going to take time because these are new markets. You have a lot of new entrants. You have a lot of uncertainty around them. And so you have a lot of people rushing in one day and then something else happens. And so a ton of people rush out and it just causes these tremendous price swings that's going to really upset sophisticated capital preservation types of investors. And that's the issue I see with cryptocurrencies right now, where gold does not have that issue. But again, I think that could change over time.
I agree with you. Yeah, I love the 10 to 20 year outlook. And similar, I hold both. I've actually hosted a lot of these debates on my channel, the gold versus Bitcoin debate, because there's a lot of appetite for this content and it's interesting to ask those questions. But similarly, I think that's the wrong question to ask. And comparing the two is a challenge because one has a 5,000-year-old history and one has a 13-year-old history. And right. There's no stress test like time. That's the thing, right? And so to me, like it's interesting to hear you talk about the service providers, because that's where I put a lot of my cash in the past, not necessarily in the crypto markets, but in other industries. When I'm buying crypto, I've said this before in the show, it's almost like I don't know what I'm buying. And I'm comfortable with that because I have enough reasons that are maybes, as in like, if I think this is a speculation, great. But if I think it's a speculation, I should probably be taking profits. And I'm not doing that just at this moment, right? If I feel like it's a safe haven asset, okay, just continue to dollar cost average in. Don't worry about the price. No worries. Maybe that's how I invest in it. It seems like the safest and most pragmatic approach if you know enough to want a horse in the race, but you don't want to be reckless or too aggressive, right? I don't buy the altcoins, for example. Whereas right. If you think this is some potential future currency on a global scale, then you should just be gobbling up as much as possible, probably, regardless of what the price is.
Exactly.
Do any of those buckets resonate more with you when you think about maybe Bitcoin specifically?
Like I said earlier, I'm a big picks and shovels type of investor, Jay. I like the companies that make it either possible to create more of one thing. So like mining companies, for example, or usable. So the exchanges make transacting with Bitcoins possible. I mean, back when Bitcoin was first founded, it was very difficult to buy. It was very difficult to sell. It's like, I have a Bitcoin. It's like, great. What does that mean? Mm-hmm. You have a Bitcoin. Congratulations. What does that mean? But now we're actually starting to see these companies come to market where we can now charge interest on Bitcoin. We can transact with Bitcoin. You can check out at a online store with Bitcoin. We can buy and sell and trade. And now Kraken has a physical bank branch where you can go from crypto to fiat and things like that. And so that's kind of where I'm putting a lot of my money right now is more into these like picks and shovels types of companies. And I hesitate to call Bitcoin a safe haven asset only because I know that it has the properties of an inflation hedge. You can't, once the finite amount is created, there's no more that can be created. But the thing is I would never recommend an 80-year-old put a substantial chunk of their portfolio in Bitcoin unless they had tens of millions or hundreds of millions of dollars. Why? Because that's just not safe. It could cut in half tomorrow. Mm-hmm. And that would be awful. I can't say the same for gold. I would recommend gold over Bitcoin because mostly just the volatility concerns. That's my biggest concern. But like I said, I think that Bitcoin will get there. We're still in the infancy stages. We're entering a different phase where instead of just there being the coins, now we're actually starting to see companies come on board where these coins are being made possible to use and to actually transact and do things with. So there actually are true digital currencies now. And that's what I think. That's where I'm most excited right now, is investing in those types of companies, because I think that's where some great opportunity is.
Okay, so I'd love you to take a second, and you mentioned you'd recommend gold over Bitcoin. I don't know if you're specifically talking about your, as you mentioned, 80-year-old clientele, or just in general, but where this question comes from is, I own physical gold, I own physical silver, I own a handful, quite a lot actually, of mining equities, but that's not because I'm a gold bug. However, when I talk to my friends who are generalist investors, maybe who don't come from the precious metal sector, as soon as I mention I own physical gold, I become a gold bug in their eyes, right? Even if I hold far more wealth in real estate, I don't become a real estate bug. If I own far more wealth in equities, I don't become an equities bug, or cash, I don't become an equities or a cash bug. But because I have some physical bullion, right? The assumption is, oh, you're a bit of a gold bug, right? So, well, not necessarily. I think it's hard to study history with any of a focus on currencies and then think you shouldn't own gold. But talk to the next gen of investors, Briton, who are focused on cryptocurrencies, who are focused on swing trade in the broad equities market. Why should they consider, and how would they go about adding gold to their portfolio?
I think you hit the nail on the head, Jay, when you said anybody who's actually studied, the history of currencies and monetary debasement going back thousands of years, the thing that has always stood the test of time is having a healthy dose of gold. And we're kind of nearing a phase right now where there's so much credit and there's just so much debt out there right now that it would make sense to have a little bit of gold, because we're debasing the dollar. And so I think a lot of it is just, keep safety in mind. I'm not saying go and necessarily put half your portfolio in gold, but what's it going to hurt you to have 5, 10%, because if all hell breaks loose, you're going to be relying on that 5 to 10%. That's kind of the way I look at it in that sense. But I don't know. It's a difficult argument, because I would never really try to convince somebody to buy something they didn't want to buy. But the way I look at it is, we're seeing inflationary forces, and the thing that the biggest, I guess, issue that investors have with gold right now is they're coming to me and they're saying, we have inflation. Why is gold down this year? Yeah. And I think people think that, and this is wrong, that just because the moment inflation is here, that means the gold price should be going crazy. And that's not an accurate way of thinking. And I can give a prime example that literally everybody in the world will understand right now. And it's going to be Clorox wipes. So we knew coronavirus was an active virus in December of 19. We knew what it was. The world, there were issues with it. And I think it was mid-January where the World Health Organization said, okay, this is like a big deal. This is COVID-19. It's a new version of SARS. We need to start doing something about this. For a long time, they said, like, this for weeks, this is going to be an issue. This is going to be an issue. And most people were just like, it'll pass, whatever. It's going to be fine. Dare I even use the word transitory? Don't worry. This is a transitory virus. We'll call it that. Well, what ended up happening was, one day, all of a sudden, people realized, like, oh, this isn't a transitory virus. Inflation isn't transitory. It's actually here to stay, and it's actually doing damage, and people are actually getting sick. It's actually harming people. It's affecting people's lives. And almost overnight, we went from having a surplus of Clorox that nobody wanted to it's gone. And now it's selling for $100 a bottle on eBay. And I think that kind of shows in a sense of what can happen, because we knew about coronavirus for months before, just like we now have inflation. We've known we've had it for almost a year now. Inflationary forces and pressures are here. And people are saying, it's transitory. And the other people that are actually loading up on gold are saying, well, why isn't it reacting? Well, one day what's going to happen is we're going to realize, like, okay, the inflation rate is dramatically outpacing bond yields right now. Bondholders are getting frustrated. If it goes on for much longer, these bondholders are going to start selling their bonds, which is going to result in interest rates rising. But they're not just going to sell their bonds and hold cash because of inflation. They're going to sell their bonds and buy tangible assets. And bondholders are generally institutions or wealthy, older, sophisticated investors. I don't think that they're going to sell their bonds and put most of those proceeds into Bitcoin. I think what they're going to do is they're going to do the natural thing. They're going to roll into a low volatility safe haven, which will be gold. And that's going to cause interest rates to rise along with the price of gold, which is exactly what we saw in the 70s. So that's the argument I would make now. Listen, we have inflation rates. The inflation rate in the US is 5.5% to 6%. Bond yields are 30-year bond yields are 2%. Imagine if that tripled in a week. How devastating that would be if there was just a mass dump, and it probably wouldn't happen that fast. But if people really started dumping their bonds and we really started seeing those long-term yields starting to tick up, that can rock the boat a little bit, big time. So
interesting. Yeah. Now it's interesting to hear you talk about that. Now, when I look at my gold position, you know what resonates the most is I had a mentor like early in my investment career. There was this like adverse reaction to cash in the market. A lot of people were hesitant to hold cash. If you have cash, put it to work, yada, yada, yada. Yeah. And one of my early mentors had a completely counter point of view. And his was cash is the most valuable asset because it gives you the confidence to go after those high risk, high return speculations, which is where I focus. I'm in the early stage market, right? I like startups, right? That's where I spend my time. Startups or, venture listed opportunities. So companies that are going public on a small exchange. And once I was able to wrap my mind around that, there's a psychological shift that occurs, which is now the reason that I own gold, because I don't think about it at like 5 or 10% of my portfolio. I think about it like, how many months of overhead do I have in my safe, right? And knowing that there's that last absolute worst case scenario insurance policy just impacts the way I go about my day-to-day life, right? And it's similar to, for example, I train martial arts. I'm a kickboxer, and I love it, right? I love it for the sport. I love it for the recreation. Another reason that I like it is for the psychological impact of just knowing that I'm probably good in a crisis, right? I'm not a fighter. Like I don't go out pick fights, never. But there's part of my brain that appreciates having that insurance policy that in a crisis, I've got an insurance policy there, right? I'm pretty good, right? And to think about gold the same way, it's that confidence, this financial confidence that lets me know I can weather a storm. I have a worst case scenario insurance policy, so I'm good. Whether that's 6 months overhead, a year overhead, 3 months overhead, a month, it doesn't matter, but it really impacts my psychology. And when you're not acting from a place of scarcity and fear, you just act different. And you take bolder steps, right? I think more clearly, right? And so I think that's maybe overlooked when I'm talking to my friends about gold these days. That's what I try to communicate. I'm like, it's not just about being a gold bug. And look, I don't think we're going back to gold standard anytime. Like I don't think so. Right. But I still want that insurance policy, that completely sovereign, independent insurance policy.
Exactly. I think that's a great way of looking at it. I'm the same way. And I look at it the same way. I always think about that when I'm making an investment, especially in private placements, because who knows what could happen, but you always have that to fall back on. It's like, I always have an asset that I can take into any shop, any jewelry shop. I can give it to anybody and they will accept it as value. And it's like you said, it's just very comforting. It's almost like an insurance policy. And I look at mine the same way. I don't think we're going back on a gold standard. I'm not one of those people that, this is all going to be a great reset. We're going back on the gold standard and then we're going to be transacting with silver certificates again in the US. No, I think we're way past that, but hey, it's insurance. It's insurance. And I think the question that every good investor asks themselves on a trade is, what if I'm wrong? And to me, that's what gold is to me. I'm still investing heavily in US stocks. I think that gold bugs have a bad connotation because they're kind of the doomsdayers. They're the guys that are, they're not only buying their gold, but they're buying their gold because they can't wait for the whole system to blow up. And they're the only ones with gold and wealth. And I think that's what kind of rubs people the wrong way. I buy gold because it's an insurance policy. It's an inflation hedge. I think it's a good investment. It's been around for thousands of years and has had proven value. And I think it will continue to be around for thousands of years. But yeah, I like the way you look at it. I think I look at it very similarly.
And that gold bug doom and gloom mindset, it's like a media culture, and it sells, right? Because doom and gloom, that fight or flight response, those headlines that trigger that, they get the clicks, right? They sell the ads. It's a good business model to keep people scared. And it frustrates me to no end. Similar, I think, why a lot of people are adverse to stepping into the crypto markets, because they step into the community and what do they see? You liquidate a piece of your portfolio right away. It's have fun being poor, right? It's the laser eyes. It's all the sensationalism of it, which it's hard work, but you need to cut through that and understand there's also value there if you're not a maximalist. And the gold market's the same way. The sky isn't falling. The world's not coming to an end. Cut that out of the narrative and avoid that media, but there's also value there. So I know we're bumping up against the clock here. So some last questions to wrap up. Navigating the media landscape to get good information about what's occurring in the market is one of the hardest things, right? Cutting through that noise to get to the signal. So talk to me about how you do your research. Are there platforms that you gravitate towards, and where should people look?
You know, as a wealth manager, you're always researching the markets, especially when you're managing for ultra high net worth clients, because you need to always be on your toes. So for me, the biggest thing is if it looks like clickbait, and if it sparks emotion inside you, whether good or bad or fuel, or if you feel anger, it probably is, and you probably shouldn't look at it. You know, I just want the raw data and the raw numbers, and I'll click on the clickbait articles to just read it and see what they're saying. But for me, my biggest focus is on data. So I go to the Federal Reserve site every week and I pull the Fed numbers. I want to know what the balance sheet is doing. You know, did they increase their balance sheet? Are they reducing their balance sheet? I want to know what the Fed is doing, because if there's one thing that we've learned over thousands of years of history watching governments is don't listen to what they say, watch what they're doing. And it's the same with the Fed. Don't listen to what they're saying, watch what they're doing. So that's what I like to do. I look at that. And then governmental policy. So this one's very tricky because politics are very polarizing, but actually read the documents. And I know they're long, boring legal documents, but you know, everybody has their own interpretation of them, unless you actually read what the law is and what these proposals are and kind of figure it out that way. It's really hard to say exactly what's going on. And, but yeah, I look at that. Travel, honestly, is a really big thing. For example, when the whole Brexit deal was going on, that was a mess. I mean, everybody was saying the UK was done for, and it was really going to mess with their trade, and the pound tanked against the US dollar. So in September of 19, Chris Weber and I, my business partner, we actually went to the UK. We're like, all right, let's actually see if there's any bearing to this. And we went and we realized that most Brits were just like, big whoop. We're just sick of hearing about it, you know, and we were asking people, and we determined, like, I don't really think this is going to affect business here. So we ended up loading up on pounds, and the pound ended up recovering and rallied against the dollar 20%. So just by switching our cash from dollars to pounds, we made 20%, and, you know, things like that. And the only way we could do that is actually going there and checking it out in person, and cutting through the crap, because there is so much clickbait. And like you said, emotion is what sells, is doom and gloom is what sells. So the advice I'd give an investor is, again, to reiterate, if it looks like clickbait and sounds like clickbait, it probably is. And if the headline sparks emotion in you and gets you excited or angsty or makes you sit up in your chair, take a deep breath. Go ahead and read it, but recognize that there's an emotional component in there that's affecting your thinking. You know, you want to focus on the boring headlines, as weird as that sounds, because those are typically the ones that have just the most straightforward information. But those are the ones that people look over because they're boring. Yeah, I'm with you. And okay, so you mentioned at the top of this interview, at a young age, you discovered Chris Weber's newsletter. That put you on, right? And obviously his style resonated with you because you stuck to it. You followed his advice. He happens to be a guy who puts his money where his mouth is. So you ended up in the right hands, right? Are there any personalities right now that you would point to, Briton, and say, if you're looking for that guru to introduce you to the world of money, right? Do any names stand out to you right now? Well, you know, Chris is still writing his newsletter, and that was very valuable information for me, but, not to toot my own horn, but I started writing my own newsletter. So anybody that's interested in private equity in particular, and my market outlook, it's free. You can just go to my site. It's britonhill.com and subscribe. And I just send out updates on what we're doing, investment things we're looking at. And it's stuff that's non-mainstream, because a lot of it's private equity type of stuff and private deals. So it's things that you wouldn't normally see in a letter. And that's because I'm shooting out at it. But I love anything by Stanley Druckenmiller. I know he doesn't put a lot of stuff out, but he's a tremendous wealth manager. Who else do I like? Omar Ayala.
Oh yeah.
In the Aidens, yeah, they're great. They're really smart. They do a lot of really good technical analysis. I love their charting. I'm a fundamental investor, but when I do need some good technical analysis, they're always great to look at. So those are some really good ones that I like.
Do you mean the Aiden sisters?
Yeah.
Yeah. Oh, hilarious. They were supposed to be on my show later today. I had to reschedule, but we're getting them on.
Oh, no way. Yeah. Pam and Marianne, they're great. And they are very good longtime friends of Chris. He's known them since the 70s. So we have a good relationship with them.
All right. Well, BritonHill.com. That's BritonHill.com. So check that out. Free content's a great place to start. So look, Briton, it's been great chatting with you. Thanks for coming on and getting in front of my audience and let me pick your brain a little bit.
Of course. Thanks, Jay. This is awesome.
Okay, guys, 3 last things. First, if you enjoy my interviews and would like a bit more, you can subscribe to my Friday newsletter. It's free, and the comment to subscribe is right beneath this video in that pinned comment. In this newsletter, I share my key lessons learned, takeaways, and any actions that I might be taking in the market as a consequence of what I've learned on the show. Second, when I started a YouTube channel, I never anticipated generating any advertising revenue. But coincidentally, I do now, which is awesome. And so what I've decided to do is donate this to an organization that is very close to my heart called Zero Ceiling. Their mission is to end youth homelessness. The way they do this is by providing young people experiencing homelessness with supportive housing, employment, professional support, life skills, and outdoor adventure. Because often young people in urban centers with no resources will never get the opportunity to experience wild places, nature that can be so transformational, and absolutely was for me. Third, if you prefer to listen to my content, you can now find us wherever you listen to podcasts. Just search for The Jay Martin Show.